Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about venkys India, which has come down from 4,500 levels to only 1,700. So let's understand whether these are attractive levels to buy or not. Let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position into any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Now about the company. Venkys India is into the poultry farming and egg production, and they supply eggs to around India and across the globe. Uh, their business is in India across the states from north to south, and they also provide different packaged food brands which are of veg and non-veg quality. Especially their non-veg brands of Venkys are pretty popular in malls and food parks, etc., where they sell cooked food like cooked fish, chicken, etc. They also produce feed supplements and vaccines for poultry animals. So that is also one portion of their business, and it is the part of the VH group, which is also into other domains or other businesses as well. About the numbers, well, the company had sales which was over 1100 crores, and so for the quarter, this is the June quarter, and it was up by around 20%. The sales was around I think 900 something crores, and the profits were down 13%. I'll describe the reasons for the drop in profit in a while. The stock is down around 62% from its peak of 4,650, which was in mid 2018. And since then, the stock has fallen sharply, and even it went to something like 1,200 rupees. But now it is trading at around 1,750. The margins have declined quite obviously that when the profits are down, then the net profit margin or the operating profit margin has declined, and the reason behind it is because of the high raw material cost. So the cost of the fodder for the poultry animals, as well as for rearing these animals, the cost of other raw materials have gone up sharply over the last 1 year, where the cost of eggs have decreased. Uh, and the promoter holding is high, over 50%, and overall, there's around 70% of the holding are with FIIs, DIIs, or the promoters. So one has to take that into account as well. And only 31% of the holding is with the general public. So the stocks are in with the people with strong hands, and probably they won't sell that quickly even if the stock has fallen so sharply from the peak. So, what could be the growth drivers? Well, for me, the growth drivers, first of all, as we are investors in the company, the first growth driver I look at is the stock price as well, along with the business. So, the price has declined sharply from those high levels where it was trading at something like 30, 35 times. Right now, the stock is trading at only 8 or 9 times. And if you took FY21 earnings into perspective, then you can say the stock is trading at only around 8 or 9 times earnings. Uh, the poultry demand has increased sharply here in India, so people are having more eggs and chicken rather than having, you can say, pulses, etc. Plus, if you compare the prices of chicken and pulse for 1 kg, you can say arhar dal or pulse, you would have to pay something like 80 to 100 rupees in urban areas, in you can say big cities, whereas 1 kg of chicken would cost you around 140 rupees. So people are shifting their food habits towards that. Plus, people are shifting their food habits to packaged foods. We have seen how jubilant foodworks numbers have been, etc. So uh, even Venky's products have sold quite remarkably. That their sales of packaged foods has also increased sharply over the last couple of years. So taking that all that into account, I see a very good growth demand over the next 2 to 3 years for the company. Change in lifestyle of people, as I said, in the metro. So more or less, people are now going out, eating out, or not cooking at home. So they are ordering food or getting packaged foods more. Plus, they are having more healthy diet. So roasted chicken or a very light meal of chicken and egg whites do very well, egg whites in the morning. And people are now more understanding of the fact that they have to take care of their health, which should include a more proteinaceous diet. And then again, the business of chicken and eggs comes into picture, and that's why Venky's looks quite you can say attractive at these levels. It is the only commercial producer of SPF chicken uh, in India, and also sells abroad. That is also a plus point, and a very big play on urbanization. So, when we talk about people shifting more towards cities, or even villages becoming more like semi-cities or third-tier cities, people are now more aware of having food, or more have become averse to cooking food at home. And so when that happens, and when both husband and wife works uh, full time, then it is a very less chance that that cooking would take place at home. And then all these things comes into picture, where packaged foods would sell more, as well as people will become more health conscious. What were the reasons for the decline? Well, it was part of the ASM list. You would understand that around 6 months back, there was a list of companies that were taken up by the Reserve Bank of India, which or the SEBI, which looked into companies where insider trading, or you could say dubious trading, had taken place, and Venkys was one of them. But now that is a thing of the past. Egg prices had shot up to around 7.5 rupees an egg, probably 6-8 months back. Now it has cooled off, and this is the one of the reasons for decline. Another thing is high raw material prices, as I said, which is not mentioned in this list. That has also caused the margins and profitability to decline, and the stock declined even further. Seasonal effect comes into picture, so the summer season is not that great compared to the winter ones, and now we are into that winter season. So probably the December and March numbers would look very good compared to what we had in you can say the June or September quarter, which would come up. The small cap sell off is also one of the reasons why the stock has declined. So, across the board, small caps have been sold off tremendously over the last 2 years, and Venkys have been no exception in that regard. And the numbers have come in lower than expected. So, people expected a little bit of growth in even in the uh, June quarter, which has not come up. So the profitability has declined, and that has also further damaged the stock price. So what needs to be done? Well, in my opinion, you can buy on declines and buy at these levels as well. So around 1500 to 1700 levels are very good to buy at, considering the kind of business it is. You need to average. If your buy price is something like 3000, 3500, you can average at these prices. uh, Okay, and you need to hold if your buy price is probably near to the current level. So do not buy at these levels if you already have the position. Do not exceed your positions that you buy in bulk, because I have said it and all that. Standard disclaimer apply. Have a 3-year minimum view, 3 to 5 years, and do not trade in such stocks because the movements are very sharp, as we have seen with the fall from 4600. And look for reasonable expectation, a good 20-22%, 18 to 22% return yearly. So this was my video on Venky's India. Please like and subscribe my channel, hit the bell icon so that you can get my videos straight away when I post it. Thanks a lot for watching.